Good afternoon, Emily, and thanks for having me on the show. So clearly, as we see in this morning's price rise again, geopolitical tensions in the Middle East are very much back center stage in the oil markets. Now, let's just recall quickly that last week, which was the first week of trading after the massive attacks on the Saudi oil facilities, we saw quite a roller coaster ride in oil prices. So we saw a 15% jump on Monday, and then following that, we saw Saudi reassurances. They said they had brought back nearly a third of the output that had been shut in, and they were confident of restoring the remaining output, so restoring all of the 5.7 million barrels per day that had been lost by the end of this month. Now, of course, the market has doubts about that, but that aside, prices calmed down towards the end of last week. But again, over the weekend, and again, referring to the Mr. Jubair's interview that you were just playing, the whole, the longer-term view as to what are Iran's or even the Yemen Houthi rebels' intentions after this is very much preying on the supply situation side and causing a fear premium in oil prices again.
Now, we got a chance to hear from Saudi Arabia, and that there are some delays between 7 and 10 days on the delivery. Any idea on when production can be resumed to normal? And then what is the significance of the switching of grades, some from light to heavy crude?
So that's really the biggest question for the oil market right now, that on the one hand, the oil market has reassurances all the way from the Saudi energy minister, the top leadership of Aramco, that, and then we have a lot of videos and pictures. Journalists were allowed for the first time into the affected Abqaiq and Khurais oil field facilities. They witnessed the damage. They saw the speed of repairs. Ironically, to my mind, it might also be that experts internationally getting their first view, close-up look at those damaged facilities might have just confirmed their earlier suspicions that the speed of repairs will not be as fast. Certainly, to my mind, Aramco saying that in the next 12 days, by the end of this month, essentially, everything will be back to normal in terms of production levels. To my mind, that is overly optimistic indeed. In terms of what Aramco is doing, and as you mentioned, it is trying to juggle between the grades available. It is dipping into its inventories. It is starving some of its domestic refineries of crude. It's importing refined products instead and diverting crude that would have normally gone to the domestic refineries to the international market. So clearly, I see it's in full crisis containment mode. The objective of that at this point being mainly to make sure that their crude customers internationally are not affected. But that has left a big question mark for the oil market as to how long it can continue to do this juggling and how long it can continue to draw down its inventories. Let's not forget that inventories for any country, and for Saudi Arabia especially, as with the threat of continued attacks, perhaps, God forbid, but just in case that happens, they need that buffer, right? So can they afford to draw down their entire inventories? That's a big question as well.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.